The One Big Beautiful Bill was signed into law on July 4th, 2025. It gives seniors a brand new $6,000 tax deduction. But buried inside that same law are $911 billion in Medicaid cuts, a $536 billion Medicare funding trigger, and a change that could drain the Social Security Trust Fund 6 months faster than expected. They gave you $6,000 with one hand, and they're taking away your health care with the other. In this video, I'm going to break down exactly what this law does to your Social Security, your Medicare, and your Medicaid. I'll show you who actually qualifies for the new tax deduction and who gets nothing. And at the end, I'll show you one form you need to file before April of next year to make sure you don't leave money on the table. Most seniors have no idea it even exists yet. Let's start with what this law actually is. The One Big Beautiful Bill Act, also called H.R. 1, is the largest tax and spending law passed in years. It went through Congress using a special process called reconciliation, which means it only needed a simple majority in the Senate instead of the usual 60 votes. President Trump signed it into law on July 4th, 2025. The law extends tax cuts that were first passed in 2017. It creates new deductions for tips, overtime, car loan interest, and seniors. But to help pay for all of that, it makes the largest rollback of federal health program funding in American history. Over $1 trillion in cuts to health programs. The Congressional Budget Office estimates that 10 million Americans will lose their health insurance because of this law. And even with all those cuts, it still adds $3.4 trillion to the national debt. Now here's the part that matters most to you if you are 65 or older. Has this new law affected you yet? Have you filed your taxes using the new deduction? Tell me in the comments. I want to hear what's happening for real people. Let me explain the new $6,000 senior tax deduction step by step, because there is a lot of confusion about this. The first thing you need to know is that starting with your 2025 taxes, which you file in 2026, if you are 65 or older by the end of the tax year, you can claim an additional $6,000 deduction from your taxable income. This is on top of your standard deduction. It does not replace anything. It stacks on top. So let's say you're single, 67 years old, and you make less than $75,000 a year. Here's what your total deduction looks like. You get the regular standard deduction of $15,750. You get the additional standard deduction for being over 65, which is $2,000. And now you get the new senior deduction of $6,000. That's a total of $23,750 wiped off your taxable income. For many retirees living mostly on Social Security, that could mean paying zero federal income tax. If you're married and both you and your spouse are 65 or older, you can each claim the $6,000. That's $12,000 total on a joint return. Now here's the catch, and this is where a lot of people are going to be disappointed. The deduction starts phasing out if your modified adjusted gross income is above $75,000 for single filers or $150,000 for married couples filing jointly. For every dollar above that threshold, your deduction shrinks by 6%. It's completely gone at $175,000 for single filers and $250,000 for joint filers. Let me give you a quick example. Let's say you're married, both 70 years old, and your combined income is $178,000. You start with the full $12,000 deduction, but you're $28,000 over the threshold. Multiply $28,000 by 6%, and you get $1,680 reduced per spouse. So your total deduction drops from $12,000 down to $8,640. And here's the other catch nobody is talking about. This deduction is temporary. It only runs from 2025 through 2028. After that, unless Congress passes new legislation, it disappears completely. You claim this deduction on a brand new IRS form called Schedule 1A. If you use TurboTax or H&R Block, it should be built into the software. But if you file by hand or use a basic free filing service, You need to make sure Schedule 1A is included in your return. If you miss it, you lose the deduction for that year. So that's the good news. Now let me show you the other side of this law, because this is the part most people haven't heard about. But that's not even the worst part. While the $6,000 deduction saves seniors a few $100s a year in taxes, the same law cuts $911 billion from Medicaid over the next 10 years. That number comes directly from the Congressional Budget Office. Medicaid is the program that pays for nursing home care for more than 60% of all nursing home residents in America. It covers the daily help that millions of seniors need: bathing, dressing, eating, moving around their home. Without Medicaid, most families simply cannot afford long-term care. The average cost of a nursing home is over $8,700 a month. That's more than $100,000 a year. Think of it like this. They're giving you a $6,000 tax break with one hand, and they're pulling away the program that pays for $100,000 a year in nursing home care with the other. The math doesn't even come close. Here's how the cuts work. First, Medicaid will now require more frequent eligibility checks. Instead of verifying your eligibility once a year, some states will have to do it every 6 months. That sounds harmless, but history has shown that more frequent paperwork leads to more people losing coverage, not because they're ineligible, but because they miss a form, a deadline, or a letter that got lost in the mail. Second, retroactive coverage is being slashed. Before this law, if you needed nursing home care and applied for Medicaid, the program would cover expenses going back 90 days before your application date. Now that window has been cut to 60 days for most nursing home residents. 1 month of uncovered nursing home care could leave your family with an $8,700 bill. Third, the law delays nursing home staffing standards by nearly a decade. In 2024, the government finalized new rules requiring nursing homes to have a registered nurse on site at all times and a minimum amount of direct care per resident per day. These standards were supposed to be fully in place by 2029. This law pushes that date to October 2034. AARP has called this damaging and devastating. Research from the University of Pennsylvania estimates adequate staffing could save 13,000 lives per year. And here's something that barely made the news. The law also triggers automatic Medicare cuts. Because of a budget rule called PAYGO, the Congressional Budget Office estimates that Medicare will face $45 billion in cuts in 2026 alone, growing to $76 billion by 2034. Over 10 years, that's $536 billion cut from Medicare. Unless Congress takes separate action to stop it, those cuts happen automatically. One person in a caregiving forum wrote, and I'm paraphrasing, "My mother is 81. She's been in a nursing home for 2 years on Medicaid. I can't sleep at night wondering if she's going to lose her coverage because of paperwork. I've already spent 3 weeks trying to reach someone about her recertification. Nobody calls me back." If that sounds familiar, if you're worried about a parent, a spouse, or yourself, you are not alone. The Congressional Budget Office estimates that 1.3 million people who are currently enrolled in both Medicare and Medicaid could lose coverage because of these changes. And 69% of all older Americans who receive long-term care get it entirely from family members. No paid help at all. When Medicaid cuts reduce paid caregiving services, that burden doesn't disappear. It shifts directly onto families, onto daughters and sons who are already working full-time, onto spouses who are dealing with their own health problems. So what can you actually do about this right now? Here are 4 steps. Step 1. If you are 65 or older and your income is under $75,000 as a single filer or under $150,000 as a joint filer, make sure you claim the new $6,000 senior deduction when you file your 2025 taxes. Use Schedule 1A. If your tax software doesn't include it automatically, switch to one that does. Do not leave this money on the table. Step 2. If you or a family member is on Medicaid, check your recertification schedule immediately. With the new rules requiring more frequent eligibility checks, You cannot afford to miss a deadline. Call your state Medicaid office or go to your state's Medicaid website and confirm when your next recertification is due. Mark it on your calendar. Set a reminder on your phone. Missing one piece of paper could cost you your coverage. Step 3. If a parent or spouse is in a nursing home or may need nursing home care in the future, start reviewing their Medicaid eligibility now. The new home equity cap of $1 million takes effect in 2028. If your family home is worth more than that, it could disqualify you from Medicaid-covered nursing home care. Talk to an elder law attorney now while you still have time to plan. Step 4. Contact your congressional representative. This is not a political statement. It's a practical one. Every member of Congress has a constituent services team. If you're having trouble with Medicaid recertification, Medicare billing, or Social Security issues, their caseworkers can intervene on your behalf. Call their local district office. Tell them what you're dealing with. It's free, it's their job, and it works. Now, before I wrap up, here's something almost nobody is telling you. The $6,000 senior deduction doesn't just affect your tax refund, it also drains the Social Security Trust Fund. Social Security is partly funded by federal income taxes collected on benefits. When you deduct $6,000 from your taxable income, less tax revenue flows into the trust fund. The Social Security chief actuary analyzed this and concluded that the new deduction will cost the trust fund $168.6 billion over 10 years, and it will move up the trust fund depletion date by 6 months, from the first quarter of 2033 to the fourth quarter of 2032. That doesn't mean your checks stop in 2032, but it does mean Congress has even less time to fix Social Security's long-term funding before automatic benefit cuts kick in. Every senior should be paying attention to this. I know this is a lot to take in. Some of this law helps you, some of it hurts you, and some of it could change the future of Medicare, Medicaid, and Social Security for the next decade. But now you understand it, and understanding is how you protect yourself. If this video helped you, hit subscribe and tap that bell. I put out new videos every week on Social Security, Medicare, Medicaid, and estate planning, all in plain English. All for Americans 55 and older who deserve to know what's happening with their benefits. Tell me in the comments, are you going to claim the new $6,000 deduction? Do you think it's worth the trade-off? I read every single comment, and I want to hear from you. And watch this video next. It explains the Social Security office closures happening right now in 2026, and the 4 things every senior must do to protect their benefits. I'll see you there.